Hi, everybody. Thanks for joining us. My screen says I'm Darren Barney, but I have attempted to change it and it won't change. So I'm Hannah Kennedy with Elite Worldwide, and I'm excited to bring in Hunter Rademacher and Ryan Clements today with CSI Accounting. Just so grateful that you guys are here today. I am pulling up the Q&A section. You are welcome to submit questions throughout. Hunter and Ryan are going to talk for a short time today, give you guys some ideas of where your money might be going, where your cash might be going. And then we're going to open it up to Q&A. And I think Q&A is going to be really helpful. And I hope you all will participate. You can submit either in the chat box, which I'm going to send you a message for here momentarily, or in the Q&A. And I'll keep an eye on that and pop in from time to time with the question. So if you think of one, go ahead and submit it and we'll bring it up when the time is right. So welcome, guys.
Yeah, thanks. Thanks, Hannah. Really appreciate you having us here today. We're really excited, like you mentioned, and it's always a good opportunity to talk with shops and about the most exciting thing in the world. Am I right? Cash flow. So we're excited for that.
Making money. I appreciate you having us, Hannah. Yeah, really looking forward to going over things. Out of curiosity, is there a possibility that there might be some familiar faces on the call today? I know we had talked or met with a group, I think, what was it, about 8 months ago?
That's always a possibility. Looking at our participants today, I've got Andrew Ritchie, Christy Hahn, Darby Newell, Aaron Burgess, Jean Morrell, Jeff Johnson, Jesse Skalicki, Jordan Sanders, Josh Saunders, Scott Schmidt, and Steve Liesbeck.
Couple familiar names.
Those names, say hi.
Awesome. No, I appreciate that. Yeah, it sounded like a couple familiar names. So, I guess do you mind if we get underway?
Go ahead. I'm going to hop off the screen, but I will be here the whole time. Okay.
Awesome. Sounds good. Well, thank you everyone for joining. And thank you for some of the folks that are hearing us for a second time. Just to give you a little bit of an understanding, Hunter and I are consultants with CSI Accounting. We specialize in working with auto repair shops. Really, Hunter and I are the tip of the spear in terms of the relationship with newer clients as well as potential clients coming on board. We look to really just help owners to better understand their business from a financial standpoint, and really get them some more of the insights that they need to run a successful business, as well as just to make a more seamless relationship with some of the coaches that you guys work with at Elite. So really excited to be working with you guys and going over things.
Yeah, absolutely. Thanks for that, Ryan. So what I'm going to do now, everybody, is I'm going to pull up my screen. I'm going to share it. Just give me a second. And the title of today's presentation, which should load up here in a second, is let me know, Ryan, can you see that?
Yep.
Okay. Stop the surprise, understand where your money really goes. Between all of our industries, but especially auto repair, it seems like the number one issue right now is just understanding cash flow. It's such a difficult conversation to have with people at times because they just don't know where their money's going. So the whole goal of this presentation, or what we'll be going over today, is just kind of give you an accounting firm's perspective as what cash flow means, how it relates to your shop, and ultimately what you can do about it. So without further ado, I'm going to pass the ball to Ryan to start things off.
Awesome. Oops, sorry, I just lost you there. So yeah, you work really hard. Cash flow, I mean, can be really tight. Hunter, you want to go to the next slide real quick? So a couple things we're going to cover. Really, it's going to be why shops run out of cash, right? A lot of people, when we're sitting down with folks, are constantly asking us, where is the money going? So we're going to go over some of that. We're going to address some of the where the leaks really are within the business, and then some examples on how to fix some of that stuff.
So hopping right into it, the first part where we need to stop and really think is actually understanding cash flow. What is it? How does it actually apply? Let's make sure we're all sitting with the same definition, if you will. So essentially, just to keep it really simple, cash flow is just the movement of money in your business. It tracks all the money coming in, all the money going out, profit, expenses, everything. Positive cash flow obviously just means you're covering your costs and you have leftover money in this spot. And then, of course, negative cash flow just means the opposite. If you, excuse me, if your cash is slowing down, you have delayed customer payments, it can be harder to meet those expenses, and you can run into what's called a cash flow bind.
Just to address a couple of the cash flow killers that we run into, really the biggest thing that, or one of the biggest things that we see is undercharging for labor. A lot of businesses that we encounter, especially, aren't leveraging some of the labor matrices and things that they should to really ensure that they are hitting the mark that they need to cover on the labor front. Also, not collecting payments on time. A big killer is like if you're performing the work and you're getting the job done, you should be having those customers paying right there, right then and there. Or if you have some sort of payment structure to collect that, you really should be trying to tighten that up and really shouldn't be exceeding anything that's beyond like a 30-day window. Um, Third piece is parts costs, right? Markup issues, especially with tariffs and things like that coming up. There's a lot of volatility with how to price parts and things like that. Strongly encouraged to implement some sort of matrix. Now, every business is a little bit different, so you really should be trying to have that matrix set up specifically for how your specific shop fits within the industry. And that's something that you should be working on with your coach or with like an accountant or someone that's familiar with how to set that up. Fourth killer, slow tech efficiency. I think there's a lot of shops that maybe don't have the right techs performing the right work. And so something that we should be looking at is just making sure that you have the right technician that's efficient. And if there's opportunities for you to coach in certain areas to maybe get that efficiency built up, look into doing so. Fifth piece, too much spending, no plan, budgets. That is something that I see, especially with shops that are becoming successful, is just not really having a strategic plan as to how to spend the money when needed. Tool truck rolls around, they're spending money on new tools. They have a couple of dollars in the bank, and so they decide to take an owner's distribution, whatever it might be. That's something that can really kill the cash flow for the business and create a lot of volatility. And then last but not least, accountants or shop owners aren't necessarily accountants. So they might just be unaware of some of the ways on how to really manage just the cash and like the different transactions that are taking place to give them an accurate picture of where the money is actually going.
So I have a little bit of an example. I would love some feedback in the chat if you guys can on this, but does this sound familiar to any of you guys out here? I'm using the name Mike, for example. Sorry if there's any Mikes out there, but Mike runs a 4-bay shop. Let's last month, for example, he did $56,000 in sales. He only had $1,200 left in the bank. The million-dollar question, where did it go? Of course, he has expenses such as payroll, parts, rent. He maybe has some credit card debt, but he still doesn't understand why there's only $1,200 there. Does anybody here have an idea or have ever ran into this particular scenario? If you have, there's no shame in that. I want to stress there's no shame in that. It's a very common thing, but ultimately it comes down to if you don't know the reasons or if you don't have your numbers in place to understand these certain things, that's a problem. And ultimately, your cash flow issues are not going to resolve themselves until you get a handle on why this scenario is happening.
Oh, looks like we got a question coming in.
Oh,
Do we
sorry.
want to address that real quick or
Yeah, might as well. We might as well. We can do that. Question. Thanks for cash or accrual difference versus benefits. That was the first question that we got, or Hannah asked in this case. It's a good point. We run into it all the time. Here's the reality of the situation. Most of our shops are on accrual. And when we talk with a shop that comes on board, they have some general interest in wanting to become accrual. But the reason that they aren't isn't so much that they are told it's one way is better than the other. Their accountant isn't helping them track it. They're not dialed in. They're not, staying on top of their shop software is like TechMetric and tracking all these different interests. I had a shop owner actually down in Texas that came on board for that very reason. He got so fed up with not being able to his numbers being off every single month when he knew he should be accrual, the main reason he decided to work with us is because we have the ability to do so.
One thing to add real quick on the cash versus accrual. The accrual will give you a more accurate picture in terms of like the cash flow. However, to Hunter's point, you will need to have a tighter relationship with the person that's closing out the books every single month, because there is going to be information that that individual will need consistently moving forward to be able to run that accrual basis moving forward. So just keep that in mind. If you do want to be a little bit more hands off on it, cash isn't necessarily a bad option, but if you are trying to get more granular with things, just know that there is going to be more information that will need to be communicated with that individual throughout the year.
On second thought, everybody, just so we don't get confusing and get intertwined on certain things, keep asking your questions. We have an entire section at the end where we'll go through every single one of them. We will not skip over any of them, but I want to make sure that we can stay on topic just on the cash flow before we get on all these different ones, just so it's not confusing as we go through things.
Yeah. No, I do appreciate the engagement though. I've been seeing a couple of questions come through and all really great questions that we'll be sure to address towards the end. Okay. Now, couple or cash flow leak number one. The underpricing labor. Once again, really want to make sure that you are leveraging those labor matrices and setting those up accordingly. We have an example here. If you have three techs and you're undercharging by $25 an hour, that's $3,000 a week lost over 150K a year. So even though like the dollar amounts may not seem like a lot in real time, you quantify that over an extended period of time. It's a lot of missed opportunity. So all the more reason to stay really disciplined with some of those pricing matrices and just ensure that things are set up accurately. One of the big fixes is really to know your break-even point. That's something that I know when we went and spoke in California a number of months back that Elite is very big on, is understanding that break-even point and kind of working backwards from there as a way to really start calculating where some of these labor rates and these matrices should be structured. Hunter, you want to take the
Yeah,
next slide?
absolutely. Just want to make sure you had anything else to say there.
Nope.
Cash flow leak number two, slow collections. So here are some particular examples that can lead to slow collections. But the overall idea is if you're doing work for people and they keep saying, yeah, I'll get you, you know me, I'll pay, that's only hurting you at the end of the day. As much as you'd love to give that, level of service to your friends, family, good customers, whatever it might be, at the end of the day, that could be a huge reason why you're in this cash flow issue in the first place. Some examples could be doing $3,000 jobs for fleet accounts and waiting 60 days. That's 60 days, you guys. I'm willing to wager a lot of things happen in 60 days. And if you don't have your money to stay on top of certain things, no wonder you're running into all these cash flow issues. One of the ways that you can solve that is at the bare minimum, take 50% upfront on jobs over $500. For example, if a customer approves a $1,200 repair, you collect $600 before starting. That covers parts and locks in commitment. Don't release vehicles without payment. A good policy is kind of like the hotel checkout, right? You're not getting your vehicle until you pay for it, right? I don't know how many of you how many of you are actually doing this or not, but you wouldn't want to just release. You wouldn't let somebody leave a gas station with a candy bar without paying for it. Why is it any different with their vehicle? So it's the same. It's the same idea. But the general idea too is a good accounting firm should help you track who owes you and how much and how long. They should be able to give you some general guidance on the best process for your accounts receivable. So if you don't feel like you have a good handle on accounts receivable, it's definitely something that you're going to want to invest some time in. Whether it's you as the owner, an office manager, perhaps, it's definitely something that will pay for itself in the long run if you aren't already doing it. And then most importantly as well, just part of cash flow, just make sure you don't miss payments to vendors too. But it's really important that you have a little bit more control over it as well. Having a cash flow analysis, really sitting down with your accountant and mapping out every single month when your payments are coming out. And if you have any flexibility to kind of move that a little bit, so it might be more advantageous, For example, instead of paying your rent, maybe you talk to your landlord and you pay it a week later when you get that big week of funding in this particular example. Hey, one of the things that we do with a lot of our shops is instead of, getting individual charges from your parts vendor every single time, switching to a monthly billing so you get one big bill at the end of the month. Doesn't seem like that big of a deal, but it's really helped with cash flow for a lot of our clients that we've seen. So.
One thing to mention too with the just tracking jobs and the receiving payments and things like that, a lot of the shop softwares now have become very robust. So if that is something that you're running into issues in just managing that facet, I would really look to speaking with your coach or an accountant that's familiar with the auto repair industry to help kind of point you in the right direction for some software that might better serve you guys and maybe streamline some of those processes moving forward. Cash flow leak number three, inventory and parts margins. There's a lot of shops out there. Some run very lean in terms of inventory, some don't. But the ones that aren't running lean generally will have too much inventory on hand from our standpoint. We want to obviously the inventory on hand be what is moving consistently, right? We don't want to be stocking our shelves with old sensors, gaskets, things like that that are going to be sitting on the shelf and tying up some of that money over the course of the year. One of the best practices for you to combat this, if you are one of those folks, is run a parts and audit monthly and return some of the parts that you maybe aren't using. Now, one thing to keep in mind is like there are restocking fees and things like that. So if that is something, just always consider that before you are returning things. And then as you are ordering, just keep that in mind. Maybe get a commitment from the customer before you do order some of the parts, and just work that into the mix. The next is buying something at $100 and selling it at 110. This is definitely where you're going to want to work it on that parts matrix and make sure that that is structured accordingly for where you want it to be, especially for some of the parts that you're working with. You make $10. But after shop supplies, advisor pay, and credit card fees, you're barely breaking even. That's an issue. We're in this to make money, so you really want to make sure that those numbers are accurate. Best practice for you guys, correct me if I'm wrong, but you really want to aim for that 40 to 60% markup depending on the part type. And once again, use that matrix for some of the common jobs, both on the labor and the part side. Set part margin targets. Good example is 50%. So $100 part should sell for really $150. That margin helps to cover some of the expenses and things that you guys have to keep the lights on and keep the business functioning. Once again, I touched on this a little bit earlier, but return some of those unused parts weekly if you can. You order something, you end up not needing it. If you want to keep it on the shelf and you think you can turn that over quickly, great. If not, get it back. Get that money back into the bank account and use it elsewhere for the business. Best practice here would be maybe to assign someone to process those returns and just ensure that those are being taken care of every week. Could be the end of the week, could be the beginning of the week, whatever works for you guys is fine, but just make sure that someone's adamant about doing that. Now, the one thing from an accounting standpoint with returns, you really do need someone that is very focused on the details because we've seen shops where they are getting reimbursements. They're getting credits or they're making those returns and they're not getting those credits. We need to know that information to make sure that the financials and everything are accurate. So always just keep that in mind when you are processing that you want to make sure that that money is hitting the bank account. And if it is, that it's being reconciled accordingly at the end of the month. And then last but not least, focus on efficient inventory management. Bulk buying, especially if you're doing a lot of like general maintenance stuff, oil changes, things like that, buy in bulk. Get those oil filters, get a deal on that. If you are planning on sitting on those for a little bit, that's the best way to do it. Best practice, just keep fast moving in stock, drop ship or same day order for some of the slow movers. that's about it. So
Cash flow leak number 4, labor efficiency. So again, we kind of chatted about this briefly when we brought it up, but just how do I really track what my techs are doing? Are they being efficient? Are they making me money? Do I have a couple of techs that are slower than the others? That's ultimately what we're going to be chatting about in this slide. But for example, a tech clocks 8 hours, but only bills 4 to 6. If your tech bills 5 of the 8 hours at $110 an hour, you're actually losing as much as $330 per day, and it could be as much as $85,000 a year with 3 techs. I'm not here sitting here, not in your guys' position. I don't want to shop to say it's easy to do what I'm trying to explain here. I'm just saying this is something that you should always strive for if you can. I get it. We're not the ones running it, and we don't necessarily understand the nuances of all the different billing. But that doesn't mean it's not something that you guys can try to shoot for in terms of billable hours. So how do you fix it? Track billed versus clocked daily. Best practice, use a whiteboard or digital dashboard that shows daily hours worked versus the hours billed for each tech. I don't know how many of you guys are doing that right now, but to whoever is not doing it, you might be surprised with the results. Do it for a little while. You might be surprised the discrepancy or the difference. And that's a lot of money that could be going out the door. Use a whiteboard or shop management software. Again, Ryan touched on this earlier. Your shop softwares nowadays are getting so advanced. There's got to be a way to be able to kind of break them down in different areas and regards. A couple of ones that we really like are Shopware, TechMetric, where we know you can do that in this case. Excuse me. Your accountant can show you your labor costs. So again, an example can be like total labor costs per tech. Wages, taxes, insurance equals $36 an hour. If you're charging $95 an hour, you're only making about $59 per hour max, and that's even before the overhead. Sitting down, having a conversation with your accountant, kind of finding out the ideal amount you should be charging for is what you're going to want to do in this case. And I get it. But if I raise prices, my customers are going to leave. Well, if you don't raise prices, you're not going to have the money in the first place. You're going to be in this cash flow blind. It's one of those tough decisions in life where we're going to have to figure out a happy medium, if you will. And then the biggest last thing I just say is avoid guessing at your labor rate too. Everything with some proper math can be calculated. Calculate your break-even rate, total overhead divided by billed hours plus profit goal. Most shops should charge anywhere between 110 and 140 an hour, not 85. At least in our experience with some of our successful clients, what we've seen.
cash flow leak number 5. Overspending without a budget. As we mentioned earlier, big thing is budget. You got to make sure that you have the money to spend, and also that you're not spending too much. I'm sure that all of you guys are familiar with subscriptions, right? They creep up fast. You can have a million of them, and it can just be a lot of wasteful spending if you're not actually using those subscriptions. Same goes for tools. The tools can add up quick when you're constantly buying and replacing things, and if you have something that works, why do you need to buy a new one, right? You should be making a pretty good argument as to why you need to spend that money on, and just make sure that you're budgeting appropriately for that. That's something that is, I don't know if you guys are giving like any sort of tool stipends, things like that to any folks, or how that typically works within all your guys' shops, but make sure that's something that you clearly map out and clearly budget around. Otherwise that can really add up fast. No plan, big can equal big surprise bills, right? Miss profit. Let's say you use the example, you forget about it, your annual $1,400 insurance premium. That's a lot of money. And that's something that happens quite often with folks that just aren't accurately tracking their expenses and budgeting around that accordingly. Everyone always has a surprise expense, and it's always nice to know that you got money in the tank to cover that. But a lot of these consistent expenses should be something that you're budgeting around. Insurance is a big one. Obviously got utilities, things like that. Those are easy ones to really budget around. And so you should be working those into the mix. You should really try to build a monthly budget, if not an annual budget. Get a little bit more granular. You can even break it down, even in some cases, and have a weekly budget. But let's say you forecast 50K in sales. Plan on 15K of that for payroll, 12K for parts, 2K for rent. Right? use a whiteboard spreadsheet or just a pen and paper to just really kind of crunch the numbers. It doesn't need to be anything that's like super accurate down to the penny, but I think you really should be focusing on trying to get at least into a ballpark that you feel comfortable with, so that you're not getting hit with some of these big surprises and can keep tucking some money in the bank for you. Set certain limits as you are budgeting on certain categories. So payroll, parts, all of that stuff are really good examples of some of the categories that you should be budgeting around. It's pretty easy for you to budget on payroll. You have a set number of technicians. You expect them to work a set number of hours. You understand their pay rates, all of that stuff. So that's pretty easy. Parts, if you're working with those, not the margin or the matrix, but if you are consistently ordering like a set number of parts, that can be something that can be really easy to budget around as well. And then some of the other various operational goods and things like that should be something that you're factoring into there. So example, cap parts at 25% of sales. If sales drop to 40K this month, your parts limit should be about 10K, not 14K. So that's one of the things why when you're using a budget and you're breaking it down more on a monthly basis, it can be easier for you to adjust throughout the year, so you're not overspending in areas where you don't need to. Your accountant, like CSI or whoever you're working with, should be able to help you build a budget that really fits where the shop is at. I'm not sure. I would imagine Elite, you guys are also helping to structure certain budgets and things like that. But really doesn't take a rocket scientist to help put some of that number or those numbers together. So just ask, and more than likely someone will be able to help you put something together that's makes you feel a little bit more confident with things.
And one thing I'll add to this real quick is you should have an exact set of numbers. Whether it's your bookkeeper, whether it's your accounting firm, you should have somebody going in doing all the bookkeeping to make sure everything's 100% accurate. But it's not always realistic to go in and be monitoring that, especially because you're not doing your bookkeeping every day, every week. It's more so usually on a monthly basis. So this is why you guys setting up your budget and knowing your big key numbers can help you keep a pulse on what's actually happening. You can track your revenue based off your shop software. You can track your parts, again, off your shop software. You can track these things with the whiteboard, the pen and paper, whatever it is, and it'll help you keep in line so you're not wildly off. Or one small overspend turns in, if you're not tracking it, can lead to consecutive months of you doing that. Now you're in this big hole in this case. So having your own set of numbers and then the exact set of numbers that you can also compare is a worthwhile exercise as well, in my opinion. So how do you fix it, right? Well, I kind of just alluded to it, but weekly and monthly cash flow system. Know your monthly financials. Make sure that you have an accurate set of numbers. Again, whether it's a bookkeeping company, somebody internally, your accounting firm, you're going to want to invest in bookkeeping. In bookkeeping, I'll be honest with you guys, it's not a fun thing to do. Nobody wakes up at the end of the day and says, oh, I can't wait to do my bookkeeping, or I can't wait to drop a bunch of money on somebody doing my books. But it really is an investment. We run into shops all the time that don't have any set of books, and they're actually costing themselves so much more money at the end of the year with a lack of tax deductions, a lack of maybe proper depreciation. There's so many items there where, I can't stress it enough, whether it's with us or anybody, just make sure you are having someone do your numbers accurately and timely so you can make, educated, sound decisions based off of that. The big thing is just, again, to know your total revenue, expenses, gross profit per hour, and cash on hand weekly to stay. This is going to be more, again, information that you'll have to do yourself, or just kind of that quick and easy. It doesn't need to be super complicated. Break it down to something that you know and you understand that you can track every single week. Do that, for example, every Friday at 3 p.m. Hey, maybe you're ready to kind of close up on the week. Maybe it's on a Saturday if you work Saturdays. I don't know. But just create a consistent schedule where you're tracking the 3 key metrics in this case. They're the metrics I just mentioned. Make it a non-negotiable. Every single week, you're going to take a look at it so you can see how the shop's doing on a timely basis. So many people that we run into that have cash flow issues aren't doing any iteration of this. And I'm not saying this is a snap your fingers and it's going to solve everything, but had they been doing this, I really don't think they'd be anywhere near as bad as they are today. set up with a check-in time with your accountant. We're biased because we're a monthly accounting firm and we like to just meet briefly with our clients on a monthly basis if they want. But just checking in with your client once a month to go over your numbers or even just bouncing off your own budget could really help you and really make sure that you're looking at everything from all the different perspectives, right? If you have been working with an accountant for a long period of time, they should be able to kind of monitor past year's results as well with your bookkeeping to kind of let you know like what you need to be planning for. The big thing I always tell people are you being reactive or proactive to this? Taxes stink, tracking all your numbers isn't the most fun thing, but you can either choose to be proactive and get in front of it and kind of plan for it, or reactive and just kind of be at the mercy of whatever pans out. Which plays into spotting issues early. Always reviewing your numbers can help you find irregular charges along with letting you plan correctly for your future. I'm willing to wager, and you guys can correct me if I'm wrong, how many times has a vendor's fees magically gone up, right? Or something's way higher than it was even just 3, 4, 5 months ago. It's crazy how that just happens. Now imagine how much harder it's going to be for someone like you guys to always identify and see that if you're not tracking your numbers, you don't have somebody doing it correctly. So if nothing else, it's a good way to keep your vendors and whoever you're working with honest. And then I also put just the importance of a weekly cash system, just making sure that you guys understand every single week what your dollars are coming in. And if you do all these things that I mentioned, you should feel like you have a lot more control over your situation. And when there are issues or discrepancies, it should also allow you to get on them and fix them much sooner as well.
Another fix to combat some of this is start a cash flow or a cash reserve. Sorry, not cash flow. A lot of shops are scraping the bottom of the barrel. That's never a fun position to be into. So big thing is start setting money aside. I mean, you can start setting aside as little as 5% of the weekly sales into a savings account. One of the biggest things is have that reserve built up. A goal should be, if you haven't set one up, to try and get at least 1 month of operating expenses in a reserve account. I would argue that you should even add a little bit more. I typically say 4 to 5 months is a really good amount of money for you to be having just as a reserve for if you do run into an issue. Hunter mentioned having some unique relationships where also now the fees are way more expensive to work with this particular vendor or something like that. It just allows you to really not have those disruptions to the flow of the business and combat some of those changes because no one has a crystal ball to see what's going on in the future. And if we did, we'd probably all be sitting on a beach somewhere. Nice thing is there's some different options with like where you park that money. You can have money market accounts so that money can even be generating interest and things like that. There's some other different ways where you can generate interest and get that money out in a emergency. But the biggest thing is you really have to be disciplined with putting this money away. It's not a piggy bank for the owners. It's not just a rainy day fund to go spend. It's really only used for emergencies, and you need to understand a little bit more of your risk tolerance to things moving forward to kind of help determine what is appropriate to put into that cash reserve accounts. A good accountant can help run some of the numbers required just to determine what your monthly expenses and things like that would look like and what an appropriate amount of money would be to start socking away.
So, and then on top of that, once you have that in place, I think a really big thing that gets missed is just collaboration of your team. Maybe there's some owners here that, don't like the idea of really presenting your numbers to your whole team and having them really kind of know the sales, but I would challenge you and say differently. I think if I look back from my personal experience, now that we're all, adults living in the real world, I feel like it's hard to feel like you're on a team at times. And I don't know, I can't speak to your guys' culture or if some of you guys are already doing this or not, but it's hard to get involved if you can't track certain metrics. A big thing that we present is like, hey, in order to track metrics, we got to do your books. You got to know your numbers. The same thing should apply for your overall internal metrics, like your sales numbers. So, I mean, here's some things some examples that you could start out with that I think including the entire team on could be super beneficial. And it can actually help make sure that you are achieving goals, but also just, hopefully preventing cash flow issues as well. So the big one is like sharing weekly wins such as hours billed, average repair order, gross profit. Hey team, last week we billed 87 hours and hit $520 ARO. That's up 12%. Something like that, if nothing else, if you do have good news to share, goes super far. And I know as myself as an employee, and I'm sure everybody else here who's been an employee in the past, it's hard to really understand where you stand at times. Anytime that you can let the team know that they're doing well it's awesome. I mean, you should be looking for as many times as possible to let them know that, hey guys, we're doing well in a certain area. Having numbers in place that they can also track will make it a lot easier to do that. One of my best practices I put here was post numbers on a shop whiteboard and discuss them every Monday morning. Make it a part of your rhythm. Normal Monday morning. Hey guys, here's what we did last week. Here's what we're shooting for. Even just asking the question. Hey guys, we didn't quite make it last week. Anybody have any ideas why? And before you jump in as the owner and say what the reason you know it to be, right? Who knows? There might be a lot of good things that you can uncover or ideas that your employees can really bring out that maybe you guys aren't doing already. So it's a more collaborative effort, and they're going to feel more engaged and more involved. And they're also going to probably want to stay there and work longer because they feel more important to your guys' overall organization. When your numbers are clean and clear, you can confidently share them with your team. Obviously, you don't want to put wrong or fake numbers up there. You're going to drive people insane. So it's important to make sure that they're accurate and measurable too. You don't want to set unrealistic goals either necessarily. It's going to spend some time kind of helping develop that, good goal that you should shoot towards and, put it in place, and then obviously track it and mentor it, change it if need be up and down as time goes on. A good example could be like you're on your QuickBooks or shop management software. If it's up to date, you can also let them know, whether or not they're making money and what's going on. You can also tie it to year-end bonuses as well, or even maybe you guys do this already. I'm sure some of you do. Weekly, monthly, whatever it might be, quarterly. Hey guys, we reached a certain goal. Everybody gets X, stipend or whatever in this case. So just to recap, choose 3 key metrics: build hours, average repair order, labor gross percentage, come back, track them weekly, know them, make sure your team knows them, and just make it a collaborative effort. It's a really good way to keep people engaged and also help you but potentially prevent a lot of cash flow issues by always striving for the numbers you're hoping for.
Just gonna run through the recap real quick so we have some time to go over the questions. Biggest thing is know where the money goes. If you can't tell me where the money goes and you can't tell your accountant where the money goes, I mean, why are you in business, right? Biggest thing is you want to review that consistently. So don't wait till the end of the month. I mean, you can if you have a well-oiled machine, but if you are a newer shop owner, I'd highly recommend just getting to know those, maybe even on a weekly basis, and especially don't wait till tax time because at that point it's too late. Price or profit, you're here to make money, right? So make sure that you're aware of that. Track some of your tech time. We want efficient technicians. We want the job done right. We want it done efficiently. So if we see someone that's tracking and clocking 8 hours or having higher amount of time on a particular job, correct it. See what you can do to maybe implement some training so that you can cut some of that stuff down and make those margins that you want to see. Collect that money faster, right? You're here to make money. You want to get paid when the job is completed. So don't wait more than 60 days. I would argue even don't wait more than 30 days. And some of that stuff, you want to take some of the money up front if you can, but never release a vehicle until it's been paid in full. And then really biggest thing that Hunter touched on last is just build really good habits. Get familiar with the numbers, build some of the weekly dashboards and just have that a system to track some of that so that you're not just running off of memory and things like that. A lot of the different shop software is really great for implementing some of that and just having that transparency for you and the team moving forward on some of the specific metrics that you're looking to track. So that is it. I guess want to open it up now to answer some of those questions that had popped up.
Yeah, Ryan and Hunter, thank you so much. Brought lots of great ideas that we can implement at the shops. You've got several questions, and I know they're in the chat here, but I'm going to ask them for everybody to see. One of the first questions was essentially, what is the difference and what are the benefits of cash basis versus the accrual basis when determining how somebody's going to look at their P&L?
Yeah, no, it's a great question. And it's something that gets really muddy and complicated at times, but we try to keep it really simple just so everybody can think about it that way. Cash, money only comes in when you actually collect it. Accrual, it comes in the day you sell it. So for example, if you had a engine job, whatever it might be, let's just say it's a bigger one, and you sell it on today, let's just use the end of the month example, because this is where people get in trouble, right? You sell it on July 29th, but they don't pay. They're on a payment term, whatever it is. The money actually comes in on August 6th. Let's just use that as a particular example. On cash basis, the money is going to go on August's P&L, even though it was sold and the work was performed in July. That's where potential issues and discrepancies can pop up between a shop software and your books. It's really important that who's ever doing your books, or that you as a shop owner understand that, because they're not going to always match up. Now, however, on the other hand, accrual, the money comes in, or you're credited on your books anyways, when it's actually sold. So if you sell that entire engine job for, I don't know, I'm just using an example, $5,000, right? On July 29th, it's reflected on July sales. It's going to go into your July P&L. Versus even though the money is collected in August, it's still going to be in July sales because the work and the job was sold in July. That's essentially what it means in this particular spot. Another thing that kind of plays into it too is just, the accounts payable side of things. So it kind of goes on the other end of it too. If you incur a bill for July on this date, but you pay it in August, well, if your cash, your expense is going to go on your August's financial, or your P&L in this case. However, if you are using accrual, again, it'll go on July's in this case. So it's really, there's no right or wrong way necessarily. It's just the question that you have to ask yourself as a shop. Do you want everything that's included when it happened on those dates, or are you okay with it when the money actually changes hands? That's essentially the difference. You can do it either or. I would say, however, about 75% of our shops are doing accrual, and that usually comes from our own accountant's personal recommendation, just because it's easier to actually understand how you're doing versus when you constantly have things moving in different months. It's kind of hard to really know if August or July in this case was a better month, because it's kind of intertwined, if you will. So
that makes sense. Thank you.
Yeah.
Second question, tax benefits for essentially how do you set up your business, right? So we set up as a partner, LLC, as a corporation, as a sole proprietor. What they're asking is, what are the tax benefits of choosing between the tax setup of a C or an S corp, a sole proprietor, or a partnership?
Sure. I can go and touch on this, and I'll pass it over to Ryan because he'll have a little bit different perspective. And it's the lovely question you all love to hear from an accounting firm. It depends, right? I mean,
Yes.
I wish I could just concretely say this is the best option, you should do it, but it always just depends. But I'll try giving you a real brief, simple version for people to expect. So, I mean, there's pros and cons with everything that you do. The government's really good about saying, like, hey, we'll give you a benefit here, but you're going to pay for it in the back end. So let's start with the C Corp. We do have some shops that are C Corps, not as many as we used to. I believe back in the day, prior to like S Corps and sole proprietors and partnerships, it was really the only option. So if you look at a lot of like legacy auto repair shops, maybe if any of you got your shop from an older individual, your father or a family member, whomever it might be, there's a good chance that they were a C Corp. It's just, it was the way it was back then until the tax law changed, I believe in the mid 90s. But essentially the reason you'd want to be a C Corp is if you have ambitions to really grow. If you want to grow into a 5, 10, 15, even maybe 20 locations in this particular case, it's going to be really easy to send out shares, and they have a lot more partners in this case. Now, the con of a C Corp, however, is there's double taxation. So you get taxed on the money when it comes in and when the money comes out personally to you as well. That's why we don't typically recommend it. Now, I'm not going to say you can't do that if you are set up as one. That's completely fine. But this is why it's so important to have a conversation with your accountant about the pros and cons as well. On the other hand, in S Corp, that's what we recommend for probably most of our clients. I bet you 80 to 90% of our clients in all industries are S Corps, just because we deem it as pretty favorable. If you have over, the general rule of thumb is a certain amount of profit that you could replace yourself. So in your guys' shops, let's just use the number $60,000, $70,000. You can pay yourself in payroll, and that just goes on as one of your expenses on your P&L instead of a amount that you'd have to pay tax on, which is called self-employment tax. Just to keep this really simple, if you are put yourself on payroll as an S Corp owner, you are contributing to Social Security. You're contributing to the government's payroll numbers. That's the government's way of saying is, hey, we'll give you a tax benefit because you're putting yourself and making the payroll numbers better in this particular case. It's kind of my opinion anyways. But also you no longer subject to the self-employment tax on the remaining chunk of your profit. So let's just say you profited $100,000 in 2024 and you put yourself as an S corp salary for 60,000. Well, now your profit's only 40,000. You're only going to pay self-employment tax on that 40,000, which is typically 15.3%. That other 60,000 is only going to be subject to Social Security and Medicare. That difference between, I believe it's 7 and 15.3 is what you typically save in this case. The sole proprietor is a great option for new starting businesses. Just to keep it really simple, you're going to pay the 15.3% on all of it in this case. So just any profit that 100,000 you'd have, you'd simply pay it. There are some benefits if you're running like just, small employees just by yourself. But typically we don't recommend it if you have an operation and a lot of employees or anything more than like 2 or 3 in this particular case. And then partnerships, it really just depends. I mean, you can be a partnership and an S corp, or you can be a partnership and both be subject to 15.3%. It's more so depending on how you want to build out that relationship. And that's more so something that, it should be more internal and not so much about a tax benefit at that point in time. Ryan, would you add anything to that or?
No, I think you hit the nail on the head. The biggest thing is like it depends, right? Not every single situation is going to be a good fit for an S corp. It's not going to be a good fit for a C corp, sole proprietor, etc. It just really depends. We do, to Hunter's point, like a lot of older shops. So if there are any folks that are out there that are like a shop, hey, I bought it for my dad. He's had it since the 70s. Very common for us to actually run into folks with that C corp designation, but very expensive. Not as many options in terms of like how we can take that money out of the business with or as many options as there are with an S corp. So we do push the S corp a little bit more, but there are some compliance requirements that you do need to be aware of with that election. And I would say like even outside of the auto repair industry, a vast majority of our clients are an S corp, especially the profitable ones that are in that 500 to like $6-7 million range.
Ryan, Hunter, thank you so much. Those were excellent explanations. I can tell you guys educate for a living. If you all have questions, also go to CSI Accounting. Is it csiaccounting.com or csiaccountingandpayroll.com?
Just csiaccounting.com. You hit it right.
Go to their website, sign up for their email list because they do so many informative videos. It's extremely helpful. So they really strive to educate on every topic they can think of, and they put it out there online. If you've ever read the marketing book, They Ask You Answer, it seems like they really live by that, which is coming up with every single question they can think of that our potential clients or people in the industries will have, and they answer a lot of them there. Next question. So I'm gonna set this one up a bit. With so many people thinking about succession planning and what happens next with their businesses and how to transition it either to employees or to family members or to an investor, we have a question that says, do you have any clients who are company-owned shops with, say, 2 to 4 employees who buy out the owner? And if you do, can you give us an idea of theoretically how that could have worked?
Yeah, absolutely. I don't know the exact number, but I think it's close to 10% of our clients every year are looking to retire and sell off their business. So it's something that we deal with all the time. And we help do the paperwork. We kind of help draw it up. The biggest question that people run into is, okay, how do I structure it and how do I get paid, right? Well, the structuring part isn't that difficult. If it's just one person, they can kind of just take over the business. The hardest part is like, how should I get paid? Should I do seller finance? Should we do it over a set period of time? Should we do a lump sum with a loan from an SBA? And the ultimate question is more so designed on who's going to be taking over the business, right? What's going to be the best for their scenario, but also something that you can, be good for your situation. A lot of our clients, because they don't love the idea of getting hammered on tax, they take it chunk by chunk by chunk. Buying your auto repair shop in 2025 is a lot more expensive than it might have been in 1990, right? And it's not to make little of anybody's work or effort. It's just the reality of the cost and situation that we're in. So how do you find a happy medium where your dedicated, awesome employee can take over the shop that they can afford and still do well because you want to see them succeed, but also you want to make sure that you're getting what you're owed over a certain period of time and also not hammered on taxes if you don't have to. So The reality is we have a bunch of stuff on our website that kind of go over all the different options, but generally speaking, the best way to go about it is either doing a lump sum where they take out like an SBA loan and or, doing seller financing or a contract where they can buy a chunk of the business over time, 20% a year for the next 5 years, or they make payments to you and you're essentially the bank in this case. We've seen it both ways. It really is ultimately going to come down, but what we do for our clients is we kind of give them all the scenarios. We calculate the numbers and kind of give them the pros and cons in each. They share that with the person buying the business. And usually it's a handshake. Hey, let's go this option. I think we can make it work. And that's typically what happens. At that point in time, we can refer them on to attorney to draft up the paperwork if need be. We can also help with that as well. And yeah, pretty straightforward at that point in time. After we got to that point anyways.
Now, what if you have employee ownership where multiple employees are becoming partners within the business and owning the company together with the initial founder or with an owner?
Yep. So it gets a little more tricky, but those employees that are banding together are going to have to create their partnership and decide what that's going to look like from the get-go. And then ultimately what it's going to look like, the owner is going to treat the partnership as those examples that I just mentioned in this case. So it really is more so of just making sure that those employees have figured out their partnership and making sure that they got that all ironclad and taken care of. At that point in time, once that's handled, then go to the owner and make sure that we figure out the payment and the handoff process at that point in time. You don't want them to not have that in place and try selling it. It can get pretty messy. It's really important that they have that taken care of first. So if you're running into that situation, that's what you want to do. That's step number one, in my opinion.
Mm-hmm. Thank you.
Well, one thing to keep in mind is like with the exit strategy, there's more than it's not a matter of like what's right and what's wrong. There's so many different options that you can run it. And that's why it's really important to work with someone that really understands the business and the objective and the goal in the transition, because there are going to be, with all those different options, you can go about it more efficient from a tax standpoint and less efficient. And that's why it can be really good and advantageous if it is kind of like, hey, we're bringing these employees that are looking to own the business, so maybe bring them into the conversation with the accounting team to say, hey, here are the different options. Here's how it's going to impact the seller. Here's how it's going to impact the new owners, right?
That's fantastic. Thank you so much. I see one more question here, and then we'll talk about what's next, where you guys are going to be, where we're going to be. How does that sound?
Sounds like a plan.
Great. All right. Last question has to do with how inventory should be identified. Should you identify inventory to a different account when the bill gets paid? Many times we buy $1,000 of stock that gets paid for and then added to the total part sale on profit and loss. That makes the parts percentage incorrect.
So, the way I'm reading this, I want to make sure I'm understanding it correctly.
I think stock means inventory.
Yes. I think what I'm reading is basically, yes, you should be posting it to a dedicated inventory account. A lot of times we see that on shops who don't have like a very good bookkeeping setup. They don't have like a set line item for inventory, and that there should be one. So, I think what's happening maybe is like, okay, you buy $1,000 of part stock for resale. You enter and you pay the bill. Maybe it gets coded to parts, or maybe it's coming out of the sales income amount. That expense is maybe hitting the P&L, even though you haven't sold the items yet. That could be causing an actual issue in this case, and we do see it all the time. So what really should be happening, I think, is you buy the stock. It should be coded as like inventory asset. It should go on your balance sheet, not in your P&L. So I think, I don't know for sure what's going on, but I'm going off of what I read. That's what we typically see in this case and what needs to happen. But it's something that is very common that we do run into. I don't know if that answered the question or not, but that's what I've taken from it anyways.
Yeah, nobody else is chatting here in the group. So thank you all for attending today. Hunter, Ryan, thank you for bringing so much wisdom and experience to this presentation today. You all heard Hunter and Ryan reference an event they had been at for Elite back in California. Many of you, or some of you, may have been there. We have another event. It's a shop owner boot camp called Fly with the Eagles that we have done to really take people to the next level. And I'm going to share the screen here. There we go. If you can, there we go. You should be able to see it. It's coming up in Omaha the week or the end of the week of October 2nd through 4th. And you can take your phone out to reserve your seat. And you can also get any questions answered. What happens there is we have industry experts similar to CSI Accounting and others. And then we have a team of 3 of our coaches or 3 of our experts from the elite team who come and speak about everything from leadership to growing as an owner and figuring out what your owner's job description is and how to step into that and out of the day-to-day and empower your team. We talk about recruiting, onboarding, hiring, managing employees. We talk about marketing. We talk about financials. We do a deep dive into the profit and loss statement, the P&L that we've talked about. We explain what should be on your balance sheet. So many things that we address over those 3 days that really help people get to the next level as a shop owner or somebody who's moving into a management role in a shop. And it's life-changing for people, especially those who are feeling so overwhelmed as a shop owner and really don't want the business running them. They want to run their businesses. That's what we have to offer. It's currently still offering early bird pricing through September 1st. So you are here at the right time. And then if I'm going to stop sharing right now, if you would like to get a hold of Hunter and Ryan at CSI Accountants or any of their colleagues, I will be sending an email follow-up today. Actually, it'll probably be end of the week that has a copy of this recording, has a copy of the slide deck from Hunter, and then we'll also have their website so that you can visit them and see if they can help you with your business. Getting professionals in to help us run our business is so beneficial. So do I have any questions before you all head out? No, people saying sounds great. Very good presentation. Thank you very much. Do you have any closing thoughts or closing words or thoughts, Hunter and Ryan?
Yeah, I think the biggest thing I just want to say is thank you to everybody. We really appreciate the opportunity to present and go over all this stuff. And even if you guys just have a general question, you're by no means obligated to work with us going forward, but we want to be a resource for you guys. I mean, if you shot Ryan and I even just a text message about something, email, phone call, and it could just be a one-off. It doesn't have to be, a very serious thing. We want everybody to know that we're here to help. I think there's a stigma out there in terms of accounting firms that they don't do any work unless you pay them and they charge bill and hourly. We don't do that. We're an open book. We really want the opportunity to help you. And if you just have general things, we're a big believer that everything comes full circle in the end. So if you have anything at all about your shops that you want, even just your perspective on from ours, we would love the opportunity to give you our 2 cents and the resources we have for you. So, but other than that, just again, want to really thank you guys all for watching and attending. And I'm sure you guys are all very busy. And if you got something out of it, great. It means a lot to us because, this is what we do. So thank you.
Thank you all. Ryan, any thoughts?
No, I was gonna say, a conversation doesn't cost anything these days, especially with CSI. So you have a question, don't hesitate to reach out. To your point, Hannah, we have a ton of resources on our website, so tap into that. We're constantly publishing new content, and it's really for folks at all stages of business ownership. So, yeah, just want to share it with you guys. But thank you for having us, and appreciate your guys' time.
We have
go ahead.
Free pricing matrices and labor matrices too. I mean, I'm sure you guys all have your own, but if nothing else, you wanted to go to our website resources and type, parts matrix and all that stuff. I mean, we have that available, so you guys can use that too. So just letting you know.
That's wonderful. Thank you both so much for joining us today. And I'm looking forward to sharing this great recording.
Awesome. Thanks again, Han. Thanks everybody. Appreciate it.
Thanks,
Thank you.